Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is a weekly technical analysis of Paris milling wheat and London UK feed wheat. I'll start with Paris milling wheat. I've repeatedly stated at the start of this commentary now for many months. There are many things imperfect with this daily chart, however, I will strive on. You see, the chief imperfection is not the changeover gaps, though I could really do with not having them. No. It is how the March-based bullish Andrews pitchfork, this super acute March-based bullish Andrews pitchfork, which I admit I first drew as a speculative bullish pattern, is still so right. It amazes me that the steep angle of attack has really not as yet been compromised after nearly 3 months of operations. Now, admittedly, the lower tie, currently at 422 even, has been breached, even perhaps broken. But it is still there. It still shows the bullish angle of attack, now supplemented by the parallel and slightly lower mid-April to date uptrend, currently at 413.5. As I have said here now for months, as long as it works, I will stand by it. Which comes now to a delicate matter. You see, whilst we have been below the lower tie on a number of occasions, we have not been below the uptrend until today. Admittedly, prices have only just dipped below it, but they closed right on the uptrend. I suspect that the day which I have been surprised has not come may well be coming soon, and we may see prices drop and close consecutively below the lower tie and the uptrend, in which case we'll have to start looking for supports below. It has not happened today, but early next week will be very, very interesting. So, with that in mind, the next significant support below is some way down at the 50% Fibonacci line of the March to May move at 374 3/4. Beyond that, we have really the 50% Fibonacci line for the whole of 2022 at 348 even, though you could actually look at the short medium moving average, and that's at 366 1/4. And then we have the rising medium moving average, currently at 326.5, and the lows of March between 311 3/4 and 315 3/4. Even down there, we are still in pullback territory, in theory at least. It's only when we start going below the rising long moving average, currently at 298 even, that we must start to consider the bullish incentive expired, and another force may be taking its place. Personally, if we see prices back within the wide congestion created by the January action of 258.5 to 288.5, well then maybe I would really start looking on the downside, but only then, again. London UK feed wheat. A lot less to go on here compared to some of the other grains markets, but we can still see some interesting actions, and one key pattern that was triggered last time and came to fruition this week. See, the peak in late March was the start of the latest pattern, as I've pointed out since I noticed it back then. We had a late March to late April ascending wedge pattern, currently 336.5 to 337.90. This pattern was not the best ascending wedge pattern that I've ever seen. Even now, it does look a bit, scrappy. But it is a true pattern, and it reached not only the primary target X in the 344 even area, but the harder to get secondary target X1 in the 353.60 area. Now I'd like to remind you of some caveats. Yes, caveats. Let me refresh your memory from my last commentary, and I quote. Now, you say there's caveats. Well, there is one, more than one actually. Okay, so ascending wedge patterns perform poorly. And in the cases they do work, they would usually need to achieve their targets within 10 sessions, as by then their bullish power in this instance becomes eroded. Additionally, this break higher with its limited movement upwards could still very well be a false break higher. So watch out for that, or any subsequent move down as a result will likely have a far stronger bearish force than this attempt higher. So watch out. End of quote. Thus, we can see that the move up needed to be quick. And during the past 2 weeks, it has done exactly that, peaking this past Monday, with all its bullish energy spent just over target X1. Now, This is where it gets interesting. With all this bullish energy spent, the market has this week suddenly turned a shade bearish. And I use that phrase advisedly. You see, the action of this week came so very close to making this week a weekly key reversal down. The conditions were set by close of business this past Wednesday, and all that was needed to make it so was a close at or under 335 even. That was all that was needed. Well, we closed at 336.5, a shade away from fully bearish, but enough to give that shadow of potentially lower prices. Hence, it will be very interesting to see what will happen early next week as we have finished with this bullish pattern and ended this week with a lesser bearish pattern. Thank you for listening. This weekly broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright ZD Tofpik and ADM Investor Services International Limited. And here comes the final bit.